Oh, hello, traders. Welcome to Trading Trail. Welcome, welcome, welcome. Okay, well, pretty phenomenal day. Well, happy Money Monday, first of all, and pretty successful day trading. We are sitting up a nice, healthy $942.02 on the day today. Pretty spectacular. I'm pretty happy with how I traded. Quite honestly, I think I had some of the best entries and exits that I've had this entire year so far. So, quite honestly, my best day trading, not just looking at the pure P&L, but I'm also happy with every single one of the opportunities that I took, and most importantly, how patient and safe I was trading the entire day. So if we back up and we look at all of my entries and the position sizing that I was taking, I think it was near perfect with the risk that I was putting on and how much I was walking away with. Quite honestly, so one of the best days trading that I have had this entire year. Today's January 13th. It's the seventh day of the trading in 2025. So let's get right into it, and we can start breaking down every single one of the trades. So there were plenty of opportunities. You just had to stay patient for them today. And so right here, let's go ahead and break down all the opportunities that I was able to take advantage of. My biggest winner by far is PHIO. ATPC close second, XXII. Few little scalps on these, XXII and XHG. SLRX, this was actually a test order that I wanted to put out. There was someone in Sensei Trend Traders, that Discord, mentioning that SLRX was halted. And normally halts don't happen pre-market, and that's where 80% of my trading happens. But I did want to see if trading was suspended. Sometimes we've seen that in the past where if you try and submit an order, it doesn't go through. So I did a small little test order of $100 and quickly sold it. 77 cent loss, like that's fine. I can eat that. But I did want to throw in that test order on SLRX. SLRX also made some pretty big moves later on in the day, but I already made my good trades, nice perfect base hits early in the morning. So I was walking away green on the day, even as I was watching SLRX. I did actually end up paper trading it for a little bit bigger of a move, and then this was a pretty reasonable loss on NITF. And I'm going to go into why I'm completely happy with this loss. And um, I'm going to be honest, I think that there are going to be plenty of bag holders on this one. This is a bag holding opportunity. And when I say opportunity, I mean that in the worst way possible. I mean, I can't stress that enough. There's going to be plenty of people that are just going to hold this bag forever when it could have set up in a stronger way. But let's go ahead and go straight into our first trade of the day, which was sitting down right at into 7 in the morning. So this black line right here is the 7 a.m. And normally at 7 a.m., you have multiple brokerages opening up directly at 7 in the morning. So if there's a nice appetizing setup like this one right here, if there's anyone that's not able to trade it before 7 a.m., they can trade it at 7 a.m. And if it's setting up right here in this area and traders are first sitting down at their desk, they have their finger on the buy button waiting until 7 a.m. And that's exactly what we saw basically. So ATPC, let's go ahead and zoom in a little bit more here. Right here, we were looking for a let's see. Bigger attention was going to start from a 242 break because of this resistance right here. Came up, tested that resistance. Then, if you notice, we draw in this nice little downtrend. So we have the peak right here, the valley, peak, and then another valley here. And that's what enables us to draw this awesome downtrend. So that's exactly what we end up doing here. And drawing this downtrend, it's key to focus on this area, draw that downtrend, and then we have focus on it as it's coming back down to test the support of the downtrend. So that was the whole reason I decided to take this trade. Now, Sensei was also calling it out, but I was actually able to snag some shares well below that break at a safer area, in my opinion. Down here, I think I had an average of like 225, and then for the breakout, I almost was able to double my position safely because I had so much breathing room in that trade for that breakthrough 242. So that's exactly what happens. This is a nice, I think it was like a $300 winner at 7 in the morning. So all of this green area are opportunities to buy. My stop loss would have been if it comes back down and starts to fail this downtrend. What we look for is a break and hold. This right here, this area right here is the hold. Price is holding above our downtrend. And another thing, this is the support of the downtrend. So we look for the break and hold of the downtrend for that larger move through, move higher. And that's exactly what we see. I mean, it's as perfect of a break and hold of a downtrend that you get, especially pairing that up with 7 a.m. bulls. So I was loading up shares down here for the breakout up here. That's pretty key here. Now, let's say we came back up and found resistance up here. I'd probably be taking some profit off the table if we found too much resistance at 242, as if price might have come back down after that. But since we're able to break 242, shows room to the next area. And we do end up breaking 261. 261 is a line drawn from last year. And then we end up finding resistance at 268 because that's where these candles are closing up here. So I go ahead and add in that 268 resistance on ATPC. So that was the first winner of the day. I think I locked in a nice few hundred on that. Yep. So walking away green $250 on ATPC. Now, if we zoom in on XHG, these are more scalping opportunities more than anything else. So XHG, there was a nice downtrend on like a 30-minute chart, and that is this downtrend right here that goes through the price action. It lines up much better on that 30-minute chart, but still keeping it up and kind of keeping in mind that if we get a nice visible break and hold, it can definitely set up for that larger move right there. Now, what I was trading in here was actually the break through 166. And not to mention this downtrend. So we look for, again, the break right here, break and hold, should give us that nice move. We get a nice pop just from the break. So I take some profit off the table right here. And then I'm holding some shares right down here because it's down here testing the support of the downtrend. Then eventually on this candle right here, it fails the support of the downtrend, goes right through just like that. And I'm closing my position basically. So now at the same time, I think I had a average right around here, like 170 basically. Um, I had an average right around 170, so taking some profit off the table right here. I just wanted to make sure that I didn't let a winner turn into a loser, and this is a perfect example of being able to keep it tight. So I was up like maybe 70 unrealized right here as it was popping in this area, and then I almost sold for basically break even because I didn't want to get caught in a larger flush that happened right here. So I was able to keep it very tight. Most of my sells were around the 172 area. And walking away, XHG, let's see, XHG, small green, perfect. I'll take it. If we got a stronger move and a price action was able to hold that 172, would have been a perfect opportunity to look for that move higher. Now, right when you see this rejection from 187, this rejection would be right here. This is it, price coming up, then finding resistance and coming back down. Now, right when we see this rejection right here, we go ahead and add in our new downtrend line. Now, if price was able to hold the 10 EMA on the 5 and possibly set up, consolidate on top of VWAP here, VWAP would have been an important area to hold, then maybe we would have seen a pop, a break through that downtrend, it holding 172 as support because we know that's a big resistance here. Maybe we would have seen price hold 172 and then set up even stronger in a better way for that 187. And again, we get that idea or we look for that trade just from this action right here. So again, in order to have a good downtrend, you have the peak, oh, why does it keep doing that? I'm not exactly sure. So you have the peak, the valley, the peak right here, and then it kind of continues to set up. So you have a high and then a higher low, or a lower high, sorry. Then you have a lower high. And this forms a near perfect downtrend for you to kind of play off of and look for a continued setup from there. So if you were able to trade anywhere in here, I mean, it's considerable, especially from, seeing this green candle movement right here. You might have been able to get that nice pop. But again, those are scalping opportunities, not trading opportunities. Those two are very different, in my opinion. And what I was realizing that I was doing from the previous market day on January 10th, I was trying to do a lot of scalping opportunities. And treating them like trading opportunities. And that's kind of what I mean by adding that new rule of it's a sprint, not a marathon. That's one of the rules that I've added into my playbook. And that is a reminder for me to kind of be patient and let the trade come to me instead of forcing the scalping opportunities. So let's go ahead and keep moving on. XXII, again, this is a scalping opportunity. So I'll show you this right here. So I got in at 786. 786 with the thought process of holding. God, what level is that? 786, like 750 something. Hold on, figure it out. It's a 769 resistance. So we get that because this candle closed at 769. So 760. I'm just going to write that in because the counter is right over that number. So 769, I was looking for the breakthrough 769, but this is a prime example of me dragging my entry. If I'm playing this breakout, I need my average as close to the 769 as possible for price to get above, hold above, and then continue on higher. Now, another way that this could have played out is price getting a nicer pop above and then a nicer pop above and then a move back, nicer pop above and then a move back, and then continuing on higher. So this first initial impulse would have been a profit taking move. So this area right here would have been a profit taking move, and then as long as price holds above the 769 here, that's when you can possibly leave some shares on the table for this larger move. Now, because my average was not the best, okay? My average was well above 769 at 786. I decided to not even look for that because my average was so high. Because if I took some profit off the table here, I would have had to hold through a losing trade to get that move higher. So I was like, you know what? This is a scalping opportunity, not a trade setup. If it goes from 769 and goes all the way up to breaks at 810 resistance, it's going to go without me, and that's perfectly fine. That is perfectly fine. So right here on that same candle, I noticed that my entry is not the best. I'm taking some profit off the table at 810 and then sell it, closing the position at 779, not wanting it to turn into a massive loss. XXI, $10 profit. You know what? That's fine. Like these are with small enough size that it's not gonna, make or break my day by any means. I'm just kind of upset that I decided to even trade that with that large size. Now, I'm glad that I was able to keep it tight. Now, if you're going to be trading the breakout here from the 769, what you kind of want to be looking for is the break. Oh, why does it select and everything? So, what you'd kind of be looking for is getting your average as close to 769 as possible, but do notice how far extended it is from the 10 EMA on the 1. I guarantee you that's probably why Sensei didn't trade this, because it's so far extended. If you decided to hold until it tested support down here, this is a nasty drawdown. Nasty drawdown. So this is what I mean by this is being a scalping opportunity, not a trading opportunity. So I decided to go into it with what I was thinking, some smaller size, and I was able to keep it tight enough that way I walked away green. but you would have been looking for the 769 break, and then you found resistance right here up at 810. Then we also found resistance right here. I guess I can draw a line at 855 now. But if you're going to be playing this, your stop loss does not need to be the 10 EMA on the 1 because it's so far extended from that. Your stop loss should really be the 769 or when price is starting to fail below it. If 769 fails, shows room to VWAP. That's minus 5%. Fail of VWAP shows room to 10 EMA on the 1. 10 EMA on the 1 fails, that shows room to the 50 EMA on the 1. So basically that's minus 20% right here and another minus 10% right here. So you would have had to hold through a minus 30% drawdown if you held to the 10 EMA on the 5. So that's why this is a scalping opportunity, not a trading opportunity. I can't stress that enough. So let's continue on. XXI. Now we get into the fun action. So PHIO is my biggest trade on the day. And we're going to go through kind of the 2 or 3 times that I decided to play this one. So let's zoom in right here. It pops from news at 7:40, and it makes this first initial strong impulse. So if you were trading it anywhere in here, those are scalping opportunities, not trading opportunities. I can't stress that enough. So right here, we want to wait for it to kind of set up in our own way. Let the trade come to us. The trade didn't come our way until about 8:10 in the morning, whatever this is, 8:12. And the reason I say 812 is because right here we have the peak and then a valley and then another peak right here. And that's what allows us to draw this nice little pullback downtrend. So right here you have this area that formed this nice downtrend. And that is what allowed me to find an entry for this 304 break. At first, we were looking at a 297 break, grabbed from this candle right here. But then found support on the 10-1. I didn't want to trade it just on a fail of the just when it just initially found support at the 10-1. This is again a scalping opportunity. I need to let the trade come to me, especially with how far extended it is from the 10 on the 5. Now, what I did notice is 297 break showed room to the next resistance. Then, right after a price breaks the 297, we find that next resistance right here at 304. So that's why it's important to have both those levels drawn on our chart, because it's kind of this range that needs to break. 297 price needs to kind of push out prices between 297 and 304 to see this larger move that we do end up seeing. So my entries on this one were actually right in this area. So let's go ahead and highlight that. I think I had a 3 average on the dot because I was buying within this range. And then you just simply cut and move on and reassess if the downtrend price fails the downtrend here. So we get that strong initial pop, and then I'm taking some profit off the table here. So this is some profit being taken off the table, and then I'm leaving the rest of the shares until the 10 EMA on the 1 fails. And if we zoom out here, look at that. I'm taking all of my profit off the table within this area. That's an amazing trade. So this trade, the first time I played it, put me up about $300 in the green. Just from being here. Plus 300. Now, I do end up scalping it a little bit more with some smaller size right here, as the 10 EMA and the 5, when price is holding above the 25 EMA on the 1, that means that the 10 EMA on the 5 is holding up in a very strong way. So we can see a slight little fail here, but it finds support and then continues on higher. So I did kind of FOMO in right here. I did look for another scalp. This was another green trade, I'm pretty sure. But basically, so far this morning, it's sitting up $300. I think it's like a total of 500 in the green. And then I end up playing PHIO again. So what I was looking for is first, initially, I had this downtrend drawn. Let's see. Pretty sure it was something like this. I had a downtrend drawn on my chart that I ended up removing. basically that looked somewhat like this. And the idea right here was we had the peak, the valley, and then another peak right here, and that's what formed our downtrend. I was thinking that if we get the break of the downtrend right here, it starts showing some really nice setups for a 4 break and that move higher. Now, at the same time, this time in the morning between like 9 and 9:30, stocks just need to set up for market open, not necessarily tradable action right here. So I decide to get in with some size for the 376 break, and then price finds a resistance right here. So right at this moment, I decide to move and reassess my downtrends. And that's exactly what I end up doing. So let's go ahead and go over here to our next chart. And this kind of shows this action a little bit better. And into market open, you can see we had a massive move. Oh my goodness. We had a massive move into market open. So let's go ahead and break down how we caught this. So right here, I decided to draw in this downtrend right here. And that's, again, we have the peak, the valley, and then the peak. And that's basically what's going to show this first downtrend. So my first entry was actually down here below 4. That was my first re-entry on this one. So I was buying right in this area. And again, my thought process was this is setting up to be the strongest one into market open. So my thought process was as long as this downtrend holds and price holds above the 10 EMA and the 5 into market open, this earlier entry is going to give me enough breathing room to go in with some larger size for the 422 break. Now that 422 break is grabbed from this resistance right here, that pre-market high. So I knew that if we were able to get above the pre-market high and hold above, that's what's going to show signs for that larger move. Now, let's go ahead and get right into it. So then, right when we get that first initial move higher and we find this resistance right here, that's when I draw in our new downtrend line. And I knew that this, in order to start making a series of higher highs and higher highs, we needed to have this new downtrend drawn on our chart. Again, grabbed from this recent little pullback and right before market open. If we had any chance of taking out this 422 high, which is the pre-market high, this is a very key level to pay attention to here, especially because it's the high of the pre-market. So if we're able to clear out this resistance, then that's going to show the best signs of strength for that larger move that we think that this stock can have. So deciding and seeing that we get the nice close above that pre-market high, that's when I decide to go ahead and add some more shares. And then right when we get this strong reaction right here, I'm taking some profit off the table. Okay, I've sized in enough. I have a 405 average. Okay, so my average is actually below the 10 EMA on the 1, which means if we're able to hold above the 10 EMA on the 1, the strongest look is underway. I've just locked in some profit. So as long as price continues to hold the 10 EMA on the 1, if my average is below the 10 EMA on the 1, that means I should be walking away from this trade profitable no matter what. Price continues to hold above the 10 EMA on the 1, and we get this larger extension upwards up to this next resistance. So then I'm taking more profit off the table. And I remember scaling out heavily right here. And I'm going to explain why I scaled out so aggressively right here. Now, number one, when the first sign of weakness is when the 10 EMA on the 1 fails. Now, if we zoom out a little bit, we know that 422 is our key area that needs to hold. We need to have a break and hold above this area right here to see that larger reaction. Now, this was a nice like 20-30% trade. I mean, quite honestly phenomenal. And my entry was 405. My average position, even after adding for a second time, was 405. Near perfect entries on playing FHIO. PHIO, sorry. Now, if we zoom out, and this is going to be something interesting. There was one other stock that was setting up at market open. And that other stock was SLRX. And SLRX also made some, 100% plus moves on the day. Now let's zoom in, and right here we have the crosshair pulled up on both of them. So right here at 941 and 945, we notice that right when PHIO is starting to pull back and fail the 10 on the 1, what's happening over here? This is a perfect example of volume rotation in real time. So what we see is bulls stepping away from PHIO. This volume, we get added selling pressure as this one's starting to fail the 10 on the 1, and as this one is up testing the downtrend. So quite literally, we see red candles here and green candles here at the exact same time. So this basically means that bulls are stepping away from this one and stepping into this setup because they think that it's got more potential from this downtrend break. Now, if we zoom in really quick on SLRX, I just want to continue to point this out for quite some time, is we have the peak, and then another peak right here as it continues to find resistance. So all that this move was, was price coming up to test the downtrend and slamming back down. That's all that move was. We look for the break and hold of the downtrend for that continued move. So I'm going to keep that highlighted right there on why we have that downtrend drawn. So anytime the price is up testing the downtrend, we want to have focus on it. And that's exactly what Sensei did. If anyone was tuned into a Zoom session this morning, is right when price started to come up towards that downtrend, he shifted most of his focus into it. And then if he was still holding a position on PHIO, he was scaling out of his position because this is a profit-taking move up here, scaling out of his position, and then just holding some shares for the 10 EMA on the 5 to hold. And the 10 EMA on the 5 held nearly the entire day. So this is a prime example of volume rotation. And if we scroll down, yes, this is a much better example. Okay, here we go. So right here, this black line is the same exact time between these two stocks. So here we see the 10 EMA on the 1 start to fail, and then price starting to come up and test the downtrend at the same exact time. So you see people selling here and then buying here. That's a prime example of volume rotation, of money rotating between all of these stocks. Now, if we go down again, another example, but this time SLRX, all of this move was up testing the downtrend right there. Found resistance at the downtrend, and if it was able to break 513, most likely would have gotten a strong pop up to that 550 resistance at least. And then if it was able to hold 513 and then continue on higher, would have been an amazing trade if you were able to snag it from that 513 break. But the reason that we don't think that this is going to happen is because price was never even able to get above this downtrend or close above this downtrend. So price is trading below a downtrend. What trend do you think it's in? A downtrend. Exactly. So what that means here is that we're going to get more selling pressure right here and more buying pressure right here because this is the favorable setup compared to whatever else is setting up that day. So volume rotation, let's just run through it one more time really quick. There we go. We have first green here, red here. And then as this one finds resistance up here, now we get selling pressure and buying pressure on the other one. So this was quite literally in real time of bulls trying to pick which one of these is going to be the winner. This early in the morning, it ended up being PHIO. SLRX continued later on to make a larger move. So if we zoom in here, this We have this resistance, this resistance, this resistance now. And notice how it's all in line with our downtrend. So then when price breaks that downtrend and holds above that downtrend, that's when we get this explosive move. Because anyone that was shorting within this area is stopping out right here. So what this also means is you could look to possibly add some shares even after the unhalt, as long as price stays above this downtrend, because we look for the break above and hold above for that larger move. And that's exactly what we end up seeing. So SLRX, many opportunities to trade this one. The best entry would have been from this 513 break, because we know that this is the area. This area right here is what needs to break for that larger move. And that's exactly what ends up breaking right after the downtrend. So we have the downtrend break and the 513 break, and all of those key levels are holding. And that's how you can be pretty confident that you're going to be getting that larger move. So let's see if there's anything else we need to kind of cover here. I did also end up making a few trades on NITO. And this is one that I really want to go over for anyone in the Discord that is interested in bag holding. I don't mean this in a good way. I'm just going to be brutally honest. I'm saying it brutally honestly because I want everyone to be a better trader, and holding the bag is not how you become a better trader. I'm just going to say that right now. I mean this with love, not malicious intent. Now, let's get right into it. NITO was setting up near perfectly for a breakthrough 175. That's what we were looking for. Now, why do we have 175? Why do we have 175? Okay, the answer is because of this action right here. Candles came up, closed at 175, slammed back down. Guess what? Happened again. Candles came up and slammed right back down. Now, right in this area, I got in for that 175 break. For the 175 break, what you kind of want to have happen is price come up, test that next resistance, hold above 175, and then maybe we start clearing out these highs from earlier. Which, honestly, I'm not upset that I took this trade whatsoever. What I am upset about are for the traders that never got out on this one. Now, why I'm upset about that is because we never got the clear break of 175. So technically, this alert would have never gone active from that 175 because we are looking for a candle to close at 176 or higher, a cent above, at least 1 cent above our key level. That's what we're looking for. Now, this is still a decent setup, let's be honest, because if we're able to get that 175 break here, we would love to see a move back up and clear out some of this area. If we're able to clear out the 2 area, that's when we start seeing some nicer parabolic action, okay? And this would have been a juicy entry, juicy entry. Now, right when we saw that we were finding more resistance right here, what I decided to do is immediately reassess, cut, and reassess right when price starts to fail our 10 EMA on the 1. This aggressive entry, especially from 175, is for a move that looks like this. When we don't get that move that looks like that, it's not the best setup, because then you'll end up bag holding until the 10 EMA on the 5 holds. And again, one of my rules is don't trade in the middle of the road. You're trading from one end of the road to the other end of the road, which we have a support at 163. So if I held through all of this, I know I would have been upset at myself. I know it. Because if you were in from this area and you were still holding and hoping for this 175 break, there would have been better and safer entries for the 175 break. Okay, instead of bag holding. So cut, reassess, and look for another entry. Now, what might we look for this better entry? Right when I saw that price made this peak and then this peak, what do we do then? We draw in our downtrend. So our downtrend right here. I didn't have this downtrend line drawn until I closed my position because I have to cut and then reassess my what the possibilities are for this trade because it didn't go to our plan for the 175 break. Again, what we need to see is a break and hold above 175 for that parabolic action. And that's not what we end up seeing here, quite obviously. So if we are trying to get in for that 175 break, we have to understand that we want some movement like this. We don't get that movement. So what do? Cut and reassess. When we have our downtrend line drawn, if price was able to hold on the 10 EMA on the 5 here, which again, purple line on our 1-minute chart, if price is able to hold, in order to even see any action above 175, what do we know that's going to need to happen? If we're looking for action somewhere in this area, price is eventually going to have to come up, break our downtrend, hold support above our downtrend, and then continue on higher. So let's go through these two possible trades for the 175. Because if you're getting in here for the 175 break, that's a completely different trade than holding through a minus 10% drawdown just to try and exit green. That's a bad trade. I can't stress that enough. I can't stress that enough. That's a objectively bad trade. You had to hold through minus 10% just to be green, you know? And not to mention, a fail of the 10 on the 5 shows room much, much lower. Much, much lower. So if price were able to find support somewhere in here and then set up for the 175, we know eventually price is going to have to break that downtrend at some point. Okay, so why would you ever want to hold through minus 30% or more just to exit green? That's still a losing trade. I can't stress that enough. You know, this is a losing trade too, technically. Okay, I lost about $70 on that one, but I'm not upset about that. You know, I will take a small loss like this, playing that 175 break any day of the week. Okay, because I was able to keep it tight. If you're just holding and hoping and bag holding on all of these losers that might eventually turn into a winner 6 days from now, that's a losing trade, and there's nothing you can do to convince me that it's not. I mean, I'm just going to say that. I mean that with love, no malicious intent included in that. But those were basically some of the best opportunities that I was able to find. Um, and let's see. So XXII did end up making a much larger move. And then there was also VRME. I was talking about this one. And the reason that this one, I mean, it's moving on no news and X, Y, and Z. But if we go to this 30-minute chart, things become a lot more better looking. I mean, this is an amazing setup that I also want to continue to study. So this is a perfect example of a 30-minute downtrend break. These longer term downtrends can often pay us a little bit more because we're looking for that longer term trade. So we're going to go ahead and drag and drop this into our notes as well so I can continue to study it. Here we go. So this downtrend, it's drawn because we have the peak, the valley, and then a peak right here and a peak right here, all kind of lining up with these downtrends. So then we immediately go ahead and draw our downtrend just like that. This downtrend, if we get a break of this downtrend, and then we also start to clear out this high up here, because we know that there's going to be big resistance between 334 and 349, a break of this area shows room much higher. And that's exactly what happens. Notice how we get the break of the downtrend and then the 10 EMA on the 30 continues to hold this entire time. So these longer term downtrends, you know, if you're looking at a downtrend on a 30-minute chart, then you also often look for a swing of some sorts on that 30-minute chart. And this would have been a perfect risk to reward a trade right here, in my opinion, because what you'd be looking to do is get in anywhere down here as long as the support of this downtrend continues to hold. So as long as it holds above like a 284 area, that's when you get that higher conviction that you're on the right side of the trade. and price continues on much higher. Matter of fact, it holds the 10 EMA on the 30. This was also an amazing trade. I know Mohammed in Sensei's Discord, one of the other helpful members. He is quite smart about landing some of these like longer term looks. He also called out that there was more room on SLRX and a few other stocks. Pretty phenomenal. Um, him and I were calling this one out earlier in the morning, and I knew that getting entries down here would have been perfect risk to reward, and then at the same time, that bigger move would start from a break of 349, and then clearing out this wick at 375. Notice how we got the break and hold of this wick, and then it continued on to the psychological levels, and we found resistance right here up at the 5 psychological level. Near perfect trade. And then VRME, again, zooming out on that 30-minute look. I mean, this is a perfect kind of swing potential. If you're looking for downtrends on those longer time frames, this is a perfect swing, in my opinion. And quite honestly, hindsight 2020, I wish I threw some capital at it, but I'm sitting up $942 on the day. So, you know what? There's gonna be more trades later. That's perfectly fine. I got my green for the day, and I'm getting out staying green. But what I'm more happy about today is how perfect my entries and exits were today. It was kind of refreshing to have a day like this, to say the least. So today's been the trading recap number 7, right? Yep, 7. If you guys have any questions or want me to cover anything else in greater detail, please let me know. Safe trading, everyone. And here's to trading day number 8. Tomorrow, I'll see you guys bright and early on January 14th. Adios, guys.